What's going on, guys? Welcome to Moo Trades, where we're gonna change some lives today. I can guarantee you that if you guys watch this entire video, there's at least gonna be some of you who learn these three simple rules for price action trading and trend lines, where you guys are gonna get the spark you need to really say, okay, maybe day trading is really for me. This isn't a get-rich-quick scheme. It's not easy. It's simple, but it takes a long time to learn. But with these videos and with practice over time, this becomes nothing harder than learning a new language. And once you master language, you can become fluent and make some money with ease. So you know what? Let's hop into the rules. Let's get it, baby. Let's go. All right. And the chart we're looking at today is the 2000 tick chart of the E-mini S&P 500 futures. And I think the best way to really show you guys how I spot high probability setups in real time is just to go bar by bar by bar as they're printing. And I'm going to show you guys my methods to spot the high probability setups. And as for the three rules you guys see here, I'm just going to explain them as we go along. So on the right side of the chart right now, it's about 6:30 a.m. Pacific time, which represents the start of the market. And with this simple price action method, it really just revolves around trend lines and resistance and support areas, as well as rule number one, entering with second entries or failed second entries. Rule number two of trend lines, once there's a break and a new extreme, so in this case, once there's a break and a new high of the uptrend, that's when we know it's over. And the third rule is that we only take entries with the perfect market context. So if you guys are confused about anything, I'm going to get into it very shortly. Don't worry about it. So like I said, we had an uptrend. So what do? We just draw a trend channel, but we're not looking for shorts just yet because the second rule is that the trend is only over once there's a new high. So let's see if we can get a new high. And we finally did. So at this point, we have to change gears and think, okay, there's a break and a new high of the uptrend. Now we have to start thinking the market can either reverse or have a little congestion and a little time where we're bouncing above and below the EMA and a new trend will resume. So let's see what ended up happening. And as we can see, we did start to reverse, but we resumed the trend shortly. And we went down and up and down again below the EMA. So this, to me, looks like the beginning of what looks like a trading range because we're going from the lows to the highs, attempt to go to the lows, attempt to go to the highs, and at this point that we see a start of a downtrend, we want to draw a trend line and look for either second entry shorts or failed second entry longs. So if we're going from this new high, we can see that we pushed below the EMA. We had a first entry long because this bar broke above that one. And then we went low again, and we had a second entry long right there. Now, because it's a downtrend, we want to look for failed second entry longs, which means all the people going long right here will be trapped if we sell below this bar and the next bar goes below that. And lo and behold, look what happened. Let's explain that one more time. We're in a downtrend. We're looking for either second entry shorts or failed second entry longs with the right market context and before there was a break and a new low, because that means the trend is not over yet. So we're still within this trend. We had the first break. That follows rule number two. There was not a new low yet. And we had a first entry long right here, a second entry long. So if we sell below that bar, that will create a failed second entry long, and it would have worked out for a scalp. And a scalp in this market is a 1 point swing in price, which represents $50 per contract. Now, it depends how many contracts you're trading, but you can scale up to 5, 10, 15, 20. There's some traders who trade up to 100 contracts. So each trade would get you 50 times 100. You guys can do the math and you can see how profitable this really can get. But now, once again, we had a break and a new low. That means we're looking for a possible reversal in trend, as well as we're bouncing right around these prices. At this point, we just have to wait and see what happens. And here we go. Once we have a break and a new low, followed by another strong trend, we have to also think to ourselves, okay, because this is like a language, it doesn't really make sense that the trend would be over when there's this much selling pressure, right? So in real time, what I do is I just adjust the trend line to fit the best price action possible. And to me, that fits beautifully. There's one touch at the top, multiple touches here, a touch here, 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 3 times on the bottom side of the trend channel. So now we can look for second entry shorts. We're counting from this new low. There was a first entry short once this bar broke below that, followed by a second entry short if the next bar breaks below this one. Now, we can also see that there's a start of a mini uptrend here, but following rule number 3, the market context here seems to say that, okay, we had a second entry short potentially if the next bar breaks below the one on the right side. We haven't had a new low of this downtrend, but we also are conflicted because we have this strong bullish momentum. However, in this case, what seems most accurate? Does it seem that we're in an uptrend right now, or it seems we're in a downtrend and we're also coming back to test this bottom resistance area? So what I'm thinking in my head, okay, there's people going long too early before there was a break and a new low of this trend. So if the next bar breaks below this one, I'm going to go short all day, and it would have worked out. Now we had a break and a new low, so now we can start potentially looking for a reversal in trend. But let's see what ended up happening. And like we expected, we see a potential reversal. So let's just draw our short-term trend line. We had a break and a new high, so this short-term trend does at least have a inkling that it might be over, and we just want to wait and be patient for the best setups possible. Now, we see that there's a new high here, a first entry long, second entry long, right above this bar, but because we had a break and a new high of the uptrend, we definitely did not want to take that, and if you would have went long above that bar, you would have got trapped. Let's go over it one more time. We had an uptrend, we had a break, and a new high. That means that the uptrend is potentially over. We also had a first entry long, second entry long, when the next bar broke above that one. There's a nice green signal bar, very bullish signal bar. However, we're below the EMA. Like we talked about, we had a break and a new high already, so we would skip that trade, and it would have worked out. But what we could have done is actually sold after this bar because there was a failed second entry long, which would have been the trade that all the smart traders were looking for. We had a first entry long, second entry long, we would have been patient and not taken the long, followed by a very bearish rejection bar, which would have worked out for the failed second entry long. Now, we can see that prices are really just having a lot of confusion and there's no real trend. So at this point, we want to just zoom out and see what's really going on in the markets today. And what this looks like to me is just a lot of choppiness, a lot of congestion. So sometimes I just like to clear some of the drawings and focus on the more recent congestion so that I can really see what's going on. And this looks very nice to me in terms of what a congestion really looks like, or supply and demand zones. So Once again, we want to draw our short-term uptrend and look for a break and a new high before looking for a short entry. So let's see if we can get one. We had a break, no new high yet, but once we see that we have all this bearish momentum, we can kind of think to ourselves, maybe there was even just this short-term trend, a break and a new high, followed by a lot of selling pressure at this resistance that we had drawn. And now we can maybe look for a failed second entry long for the people who are looking to go long at the top of the supply zone where there's a lot of selling pressure, and after there was a break and a new high of this mini short-term uptrend. So let's count from these highs. We had a new high, a first entry long here, followed by a strong push below the EMA, followed by second entry long. So let's see if we can see a bearish bar and get a failure, which happens right here. First entry long, second entry long, failure. If we would have sold right there, we would have had a nice trade. And as we see, the bottom ended up falling out, followed by a lot of selling pressure. So we could have maybe had a very nice run or two. So once again, let's just draw our trend line. Let's look for second entry shorts. And we have one right there. We have a new low. We have a first entry short right there because as we see that green bar on the right side broke one tick below the one previous to it. First entry short. And a second entry short with a nice bearish signal bar at the EMA, touching the trend line. We've gone below the previous resistance, which signals there's a lot of bearish momentum, and it would have been another nice trade. Now, once again, let's see what happens once we have a break. We have a break, but we're not looking for long entries just yet because there was no new low in place, but we have one right there. And we are just finding a lot of congestion, so we want to wait and be patient until a nice setup really is shown to us. And we can see that we ended up having a lot of continuation of this downtrend. So what that really signals to me in real time is, okay, maybe there's even a wider downtrend to the one that we just had. And that looks pretty nice to me. Now, this doesn't mean we can't have short-term trends within these trends. Because, look, we had a break and a new low of this short-term trend, followed by a mini uptrend, break and a new high, followed by more selling pressure, which signals to me the downtrend isn't over just yet. And let's look for more second entry shorts. New low, first entry short, second entry short right there, because we had the new low here, we're going up. We had a first entry short, second entry short, following this bar, if the next bar breaks below it, and that would have worked out once again. These rules are simple, I'm telling you guys, and if you master it in real time, you can have very high win rates. Now, let's see if we continue this downtrend, which we do. And we just always want to zoom out so we can really get a clear picture of what's going on, because at this point, we're getting later into the day and we see that there's just a lot of congestion. So we definitely just want to stay out of that. But I think that's going to wrap up the video, you guys. Thanks so much for watching. Tune into more videos nearly every single day and give me some comments, like, subscribe, give me some feedback. Peace out.